A couple of weeks ago, he had mentioned that this market is undergoing a major correction. Sushil, now tell us, how do the charts look? Is this the start of some sort of bear market? And if yes, what are the levels to watch? Are there any levels that are sacrosanct on the lower side now?
Thanks for getting me in here, Sonia. All of us can get away by saying, I told you so, but to withstand this sort of violence of markets, more than a forecast requires position sizing correctly. And, so thank you so much, but no thank you. I'll remind quickly, after the budget, the kind of crash we saw, and everybody got gung-ho that the 2,000-point move down has begun. And the kind of whiplash that bears faced that time, larger than that whiplash can be faced by bears right away. So it's too late for anybody to add new short positions. And it's definitely a little early to, say that the worst is over. So there's always so much money, and whoever is trying to make this much money is going to always suffer. So if we are going to trade small and keep our trailing stop losses, the worst is not yet over, but we are very close to it.
So what would be the levels?
So in terms of levels, see, as she asked a very nice question, are there any levels to respect? Eventually, no levels are to respect, but it's more like patterns. So in orderly markets, in structured markets, one can use levels and breakouts and breakdowns as sort of a trigger for trade entry. So on this, long-term weekly chart of the Nifty, if you see the bottoms connected of the last several lows in the last 3 years, that area is slightly under 10,164. But that's academic, you can always draw these lines slightly differently. Also 990, 9,900 can be another number. So I would say, broadly speaking, we are here, let's ignore levels. But more importantly, if we look at leads and lags, and certain sectors that have been leading this fall, and certain stocks within the sectors. So maybe, stock specific, some amount of very, very humble shopping can be begun by delivery investors.
Okay, so that humble shopping list, what kind of stocks? Let's look at large caps to begin with. On the Nifty, what's looking relatively safe?
Say a Hindalco, even though it has broken our, long-term pattern formation, and, when disorderly markets, rather than getting too fussy about specific level, I think, when I compare this with a copper chart, last time copper from the low of 2016 to the high of 2018 went up by about 50%, and Hindalco went up by 4.5%, 4.5 times. So I'm not saying that Hindalco is right away going to double, but I say feel reasonably secure that if one can take 5 to 10% pain on a delivery position, on the next rebound in say next 3 months, Hindalco bouncing by 50% does not look audacious to me. And who knows, this might be the final bottom that Hindalco becomes a doubler from here. So amongst the metals, Hindalco is leading the way down. It's overstretched. And say...
What about crude sensitives? I thought that was the one everyone's looking at.
See, crude has come to the lower end of the last 10 years trading range. We are waiting for it to break below that range. It's going to be a little early for me to stick my neck out, but having got it right so far, I don't want to, over leverage my gains. But there are chances, which I'll confirm, say maybe in next 2 weeks, certain patterns I'm waiting to see for confirmation, that crude may actually get into a 4 to 5 year kind of a regime, that it will not go up beyond, $35 on the light crude. So we'll wait for those confirmations to happen. If that happens, and by that time, if a BPCL is already close to 500, I might go and renew my big buy call on BPCL ki 500 ka 700 hoga. But right now, even for a trading rebound, the entire oil and gas pack led by BPCL, HPCL, even a Mahanagar Gas Nigam, or that entire complex looks like a safe place to start pushing in some of your spare cash into.
Okay, so you said Hindalco is a big one that you're betting on. What else? I mean,
not a big bet. A very brave bet.
A brave bet. Okay, a brave bet. Your brave bets have worked in the past, right? So what else are you looking at?
See, the last ball is gone, and I can get out completely clean bowled on the next one. So let's all stay humble, small positions. The next one is like oil and gas, Hindalco from the metal pack. I'm with an eagle eye focused on the charts of the auto pack as well, in which Tata Motors is leading on the way down. If somebody has a pain tolerance to handle it all the way up to 80, then you start nibbling in. But if you don't have that pain tolerance, wait for a reversal to work out. So I would say I feel comfortable in imagining, more than forecasting, that 180 on Tata Motors will come before 80 breaks. But can somebody handle a 25 rupee pain on Tata Motors? These are markets with violence. In 5 minutes, 20 rupees can be knocked off and the stock can come back. So with that, if you are going to buy 1,000 shares, maybe buy 50 shares now and over the days will keep accumulating.
What are Reliance Industries charts telling you now, Sushil?
My hunch is, before I go to the hunch, right now, say whether 10,150 or 9,900, wherever this bottom becomes, I feel fairly comfortable in saying that if we have seen such a fiery Holi, we'll also see an equally vibrant Diwali within this year. And
Bless you.
and markets are again going to go back to a new high. Whether that happens by Diwali or after Diwali, and there are two layers to it. Whether, we see a 1,000-point rebound back on Nifty in the next 7 trading sessions and again it comes back to make a final low, I can't predict that. But I think, this all-time high so far was an interim top. The signatures, the DNA, that after this sharp drop that I like a fool was keeping on telling you, right from there, those signatures are there. That will go back and again go past the all-time highs. If not by Diwali of this year, by Holi of next year. And in that case, Reliance will again be the stock that is going to lead it right from the front and back.
So, when
we
you
can take
give
the
the-
interim top and wait for it. But don't tell us it is interim bottom. Please tell us that the bottom has been hit. No?
See, it's always good to be cautious and humble. And I don't see yet the signs of bottom having been hit. So
What's the number? Below 10?
it can, all numbers are right now, all the easy ways of deciding are getting killed. The market has chosen to destroy all easy money picking skills.
What is your biggest indicator as of now? Is it the Dow? Are you looking at the US 10-year yield? Because it's all connected. So
See-
what's that indicator that'll give us
See,
the
very
clue?
simple idea. See, technical analysis or any form of analysis cannot beat common sense. So say if money is made free in this world, and now cost of energy is almost getting free in this world, right? The violence in equities has happened. The only place left for a violence to happen is the currency markets. And once that happens, everybody is punished out. The moment gold starts again drowning down back to, 1450 area, it can come back to. The long term, I'm a mad bull on gold. But so in terms of, the S&P 500 that you're talking about, I'm unable to rule out whether 2720 area will be a bottom and it cannot go back to 2300. But even if that happens, there is no Shastra that dictates to me that Nifty cannot bottom ahead of S&P 500. There will be leads and lags.
Okay, I want to ask you about Reliance. I know we've spoken about this in the
Yeah.
past, but it had a one-way rally and now suddenly it's coming in for massive profit taking. But for a long-term investor, not for a trader, for a
Yeah.
long-term view, at what price does it look attractive?
See, that price level has already been broken and, one wanted to grab Reliance by both hands. So, in that sense, the traditional logic of finding entries, exits into market is right now completely challenged. Let's wait for some more time. Let a slightly higher bottom form on hourly charts or whatever. And, right now, the first stage, everybody goes in for delivery buying. And then as it starts getting profitable, we get leveraged. So, this is a zone to be a buyer than to be a seller on Reliance. And 50 rupees here and there. But Reliance is going to go and break into new highs before the rest of the market.